microfinance and macro profit. For years, microfinance conjured up the image of hardworking, sincere social workers. Many of us have been shocked in the past few days when the word conjures up investment bankers, private equity and pinstriped suits. Will the profit culture of the stock markets fit the clientele of the MFI is the question we are asking. Joining me are Ramesh Ramanathan, Chairman of Janalakshmi Financial Services, and Vijay Mahajan, the founder-promoter of microfinance institution Basix. Gentlemen, welcome to the show. Mr. Mahajan, you go first, and literally a billion-dollar question. Are you convinced that the stock market is the route to raise more capital? Do we expect you to follow in the footsteps of SKS?
Well, you know, having an IPO is inevitable beyond a certain size for any corporation, because when you have to raise capital, say beyond 300 or 400 crores per annum, there's virtually no other source, and you have to go to the capital market. So $100 million per annum is the threshold. Now, it so happens that Basix is below that size, but I'm sure we'll get there fairly soon, maybe in a year or 2 years. So it is inevitable that anybody who grows will have to have an IPO. So
you don't have any ideological issue that the stock market culture could distort the way in which your social enterprise is run. You don't have a problem that that social benefit could get kind of adulterated by the need to prove profit, which is what stock markets want.
It's true, but you know, the stock markets basically reward steady performance, good governance, transparency, and so on. You have companies like the HDFC, which have for decades raised money and have done very well for their customers, and so many others in other sectors. So I don't see any connection between having to reduce our service level to our customers and being in the stock market.
I'm not entirely convinced of that, but I'll come back to you. First, let me get Ramesh in this. Ramesh, I know from having heard you on the issue that you're not against the profit motive itself. But you did tell me last time that you have a problem with the Aesops culture. What is your problem? Where do you think the balance must be struck?
I think the first thing we need to do is to establish, just because somebody is working with the poor doesn't necessarily make that enterprise a social enterprise. Let me give you one example. Hero Cycles. Mr. Munjal began by selling bicycles to the poor. There are companies like Unilever where, the sachet culture was created specifically because the poor was a potential target market, and they created a product that could be appealing to the poor. So I think just creating products and services that can work for the poor doesn't necessarily just mean that those become social businesses. In fact, those are pure commercial businesses, and nobody has any problem with those. So no one is accusing Mr. Munjal or Unilever or anybody else who's targeting products at the poor of being somehow morally compromised. I think the issue comes up when we say we are not just a pure commercial enterprise, that we are actually a social enterprise, and then behavior seems to suggest that those are not consistent, which means we need to ask the question, is there more to a social business than just a profit motive? And if so, what are those things? And how does the enterprise actually protect those and promote those? And I think here's where the issue comes. I think that when somebody wants to set it up as a social business and harness the part of the market, there are lots of tremendous benefits that come from harnessing the part of the market: innovation, capital, scale, the ability to recruit people, and so on. But it comes at a price. And that price is that the markets are driven by money and wealth creation. And that price we need to recognize, acknowledge, and somehow protect against. Because if we unbridled, open the door of the social enterprise, the danger is that this double-edged sword of the market can overwhelm the social intent. And I think that's where the issue comes up. So one example of how this can overcome it is in the question of ESOPs. It's a very normal practice in a commercial enterprise, nothing wrong with it, to say, somebody has equity, and then when you hire a new CEO, you give them stock options. But imagine what happens in a social enterprise when that takes place. The CEO gets stock options, the next rung of the management says, why should I come in and bust my butt every day until I get a skin in the game? And pretty soon you have the entire enterprise actually oriented towards share price and their mark-to-market value and their wealth creation. And I'm not saying it will, but I'm saying that there is a danger that that culture can erode the social component of the enterprise, not its market-driven aspects, which are a good thing.
All right, your point is taken. It's really a difference in degree and not questioning the stock market itself. But Mr. Mahajan, you know, there will be other issues that will come up. You may be charging your clientele 30%, but with that money, they are almost able to double it. So 30% per se is not usurious, but externally it might seem that way. And when you are in a situation where you are presenting your profits, or if there is in some district a political or a social or an economic problem, chances are that, you know, this could become a fodder for political or for some kind of unrest. Is it possible that these institutions can quarter after quarter continue with the profit motive? There could be some kind of a social unrest question.
Well, you know, the issue of interest rate is something that microfinance institutions have to constantly answer for. And basically, in a nation where 70-80% of the banking assets are in the public sector, and public sector banks are able to subsidize loans at the lower end of the market. I was in Maharashtra last week, for example, and now Maharashtra farmers will all get 0% crop loans. So compared to that, even a 6% loan would look usurious. But if we're talking of realistic pricing, then the thing to look at is what MFIs are doing. And while it is true that, you know, politicians and even left intellectuals, various kinds of people keep attacking MFIs, but when you do the math with them, they concede. I once had a hearing in front of the Standing Committee of Parliament Standing Committee on Finance, and it took me 10 minutes to explain to them why it is 24%, and several of them at tea time came and said, why don't you come and work in my constituency? So, you know, we've got to make a choice as a nation between perpetually subsidizing certain sectors, whether it is power or kerosene or credit, or building, you know, a robust set of enterprises which are self-sustaining, and which, by the way, when they compete with each other, will bring down even their margins. So right now what you're seeing in case of SKS is the pioneer getting an extra normal profit, and there's a curve which will go down over a period of time, and by the time the fifth or sixth IPO happens, it'll be a stable equilibrium. So, and that's how all sectors get built, you know. So I really think that we are sort of exaggerating the point because, as Ramesh said, this sector is supposed to take care of working with the poor. Having said this, I also want to say that I do draw a line between the institution being profitable enough to attract capital on an ongoing basis and personal enrichment for the founders or the you know, the initial promoters and indeed the current CEOs and so on.
Exactly. Actually, you explained it so beautifully, Mr. Mahajan. Ramesh, really, the final question to you. You know, all companies benefit with good corporate governance, and that's pretty rare in India. I mean, you will always get a higher valuation for an Infosys simply because corporate governance brings in that dimension. But in microfinance, corporate governance needs to be even more careful because of the nature of the clientele. What would be your toolkit? What would be your 2, 3, 4 golden rules of corporate governance that need to be maintained?
Well, I think that's, you've hit the nail on the head. I think that part of the bar that needs to be placed on microfinance institutions is an extremely high bar on corporate governance. I think that there are a few things that are basic tenets in pretty much any industry, but might be more applicable or more acutely focused on in the microfinance sector. The first is a transparency on the complete pricing, cost curves, the total fee structure, so that you get to understand truly the economics of this. You talked to Vijay about why is it that interest rates are being charged so high, and Vijay gave a very compelling answer. I think it's important that that gets published out into the public domain so that the public at large, whether it's media, whether it's regulators, whether it's investors, get to understand the structure of costs of microfinance institutions. I think that has two benefits. One is it helps to focus attention on one of the critical components of cost, which is operating costs. It's in double digits. I think that over time, as scale becomes evident, one of the advantages of MFIs that can scale is that those operating costs go down, and that can be tracked. I think the other is, very importantly, independent members of repute on the governing board of the microfinance institutions. I think that that's going to be a critical aspect of transparency and accountability. That would be a good signal for MFIs to send to the investor community as well as regulators and media.
Well,